with nvts Semiconductor stock. Today the stock is down by about 9.15%. It's a red day here. It's quite a brutal red day, but I can't say we didn't see this one coming. And if you've been watching the channel for some time, we have been speaking about the potential of this. Anyway, I want to speak in a bit more detail tonight about what this potentially means. I want to speak about where it takes the company. I want to speak about where this could potentially be taking the company in terms of share price into the next couple of days. If you do enjoy these videos, guys, please make sure to leave a like and subscribe to the channel. But as always, do remember, I am not a financial advisor. Make sure you're doing your own research and coming to your own conclusions. Anyway, let's jump straight in and focus on some of the latest. Now, I want to first point out one thing. A stock like this dropping by 10% or just under 10% can seem extreme, but it's really not, or at least that's just my viewpoint. We spoke about this for days. We've spoken about this for weeks. The stock is rallying and rallying and rallying. And I think if you're going to get into a stock that in the 1 month is up by 57%, in the 6 months is up by 230%, a 9% pullback really is just an inevitability at some point. Now, looking at some of the latest, just to make sure everyone's on the same page, nvts closed at 28.88, dropping 9.42% on heavy volume. Despite today's drop, the stock is coming off an explosive multi-day breakout rally, fueled by its expansion into artificial intelligence, reaching a new 52-week high of 33.82. And that's exactly what I want to focus on tonight. nvts as a company, as a stock, is still doing really good. This pullback that we're seeing today potentially is exactly that, a pullback, right? That's not too extreme. In the after hours so far, we're seeing a gain of 0.85. Now, we'll speak about what this means in a moment, but just to make sure everyone's on the same page, we are seeing a number of catalysts driving the stock much higher. We know about the AI power infrastructure shift. The company is aggressively shifting this focus away from the crowded consumer fast chargers towards high-power AI infrastructure, with its next-generation gallium nitride and silicon carbide chips, which are vital for cooling and power density inside advanced server racks. We have the 800V collaboration, where major investor interest has centered around the design work partnership with partners such as NVIDIA on 800-volt power architectures required for power-hungry next-generation AI data centers. All of this ties into a number of great things, right? We have so many things. We've got the Indian market expansion, for example. At the same time, there are a number of factors to be cautious of. And I want to really speak about this, and I want to really emphasize this on a 1 day where we're seeing a drop like, 5, 6, 7, 8, 9, 10%. This is a perfect time to just reiterate this. Now, again, guys, you can do what you want, right? I'm not a financial advisor. Whatever you do is absolutely up to you. But I do think we should be cautious, and supposedly so does Morgan Stanley. Analysts at Morgan Stanley have issued a warning to investors, stating that whilst long-term AI infrastructure roadmap that we're seeing is sound, the recent massive vertical rally may face short-term volatility or a period of profit taking, and I couldn't agree more with that. We'll get to what that could mean in a second. There's also high short interest, with massive trading volume and momentum that has partially amplified or been amplified by high short interest, driving rapid short squeeze type momentum in the last few sessions. So this is absolutely something that I want to focus on. The rally here has been explosive, to say the least. You're in a stock where, yes, in the past 6 months you're up 230%, but if we really have a look here, since the 7th of May, not that long ago, to the recent high, which was on the 26th of May, so 19 days, the stock was up 100%. That is basically a vertical rally, right? That's basically a vertical rally. And I spoke about this, I think it was either yesterday or on Sunday, I think it was. And we spoke about the fact that when these stocks rally and rally and rally, right, and they move up and up and up at such momentum, and I said this is a warning sign, and I'm not trying to say I told you so, guys, but I am trying to focus on this in terms of our strategy moving forwards. You really want to find, I think, with this stock going forwards, a level of support.
This house in Texas, let me show you how I invested into it with just a few $100s. I did it using something called tax lien investing.
Support, right? Because if we have a look at these levels since the 19th of May, we hadn't found a support. This was not really a consolidation period. We were just gapping up and gapping up. And on a emotional level, so in terms of investor sentiment, it made perfect sense. Investor sentiment was crazy. People were absolutely hyped, and they still are, to be honest, right? And people were just buying and buying and buying. But the technicals were screaming out, and kind of still are, a few warning signs. We saw a 6-month RSI, which was certainly in the overbought, implying that the rally was very, very steep and the stock could have been technically overbought. The 3 months saw the same thing, and the 1 month saw it even worse. What this now means is, and what this could mean for tomorrow, by the way, it means that what we're seeing here with nvts is potentially a floor forming. Potentially. If you can hold supports above this 28.30 level, things are good, right? If you come back tomorrow with a gain of, or even a loss of like 1 or 2%, if you're within a few percentage points either way, I think it shows strength. If you see a move up 2, 3, 4, 5%, especially if you get above this resistance that you're seeing at $30, or even just back above this one that you're seeing at $29.50, that's strong. That's really strong. Now, I do think at the same time we should be cautious, right? Because pullbacks like this are going to be inevitable. You just are not going to have a stock run up 40, 50, 60% in a week, and people aren't going to want to take profits. Of course they are. And this is something that you have to be comfortable with on the strategy. And that's why I think right now, a lot of stocks in AI, a lot of stocks in quantum specifically, you've got to be making sure that these are aligned with your personal goals, right? So is there still potential for continued rallies? Yes, I think there is a very, very strong possibility the stock will hit 30 again. I think there's a strong possibility it can hit 32. I think it can possibly hit 30, 34, maybe even up to 40 or more, right? Of course, nobody can say for sure, guys. Make sure you're doing your own research and coming to your own conclusions. But that sounds like a very clear-cut thing to say. But that's only half of the picture. Because whether it's back up to 30, 35, right, what does the journey there look like? Is it intense volatility? Is it sharp pullbacks of 5, 10, 15, 20%? And are you comfortable with this? Because for me personally, my strategy always is when a stock's, rallied 200 to 300% in a matter of months without many major flaws. I mean, the last consolidation period we had was between the 12th and maybe the 21st of May. So yes, that's not an awfully long time ago, but it is relatively long ago in proportion to the rally that we're seeing. So what I'm simply looking for tomorrow, and what I'm trying to say here is caution should certainly, in my opinion, be exercised when looking at this stock. It's not necessarily a bad play. It's a stock with a lot of potential. It's a stock that continues to have a lot of potential. But at some point, investors are going to want to take profits. And when we see these euphoria stocks where people just get hyped and hyped and hyped, when euphoria kicks in, people tend to focus a little bit less on the fundamentals and on the technicals. And the thing is, these things all kind of work in tandem. Or in trio, right? In trio. These things work together. Investor sentiment, technicals, which are driven by investor sentiment, and also fundamentals, which, fundamentals drive investor sentiment drives charts. That's the way I've always seen it, guys. That's the way I'm looking at it into tomorrow. If you can see a bit of a consolidation or even a small rise to the upside, stock's looking good. However, if you come down a little bit, you are looking at a potential for an even stronger cool-off. I do think there's a potential of seeing that bounce here, but I wouldn't personally be making any reactionary moves. I would be playing a strategy that is aware of the risk, and a strategy that is comfortable with the volatility. Just my thoughts, though. Thank you for your time, guys, and goodbye for now.